Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, February 16th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So it is a holiday trading session today with the cash equities closed and a shortened futures trading session. You do have gold futures trading back above $5,000 an ounce after that softer than expected U.S. inflation data lifted the hopes for further interest rate cuts this year. That helped erase some of Thursday's losses. So what we saw last week was Wednesday, we had that payroll data come out a little bit firmer than expected. Then you also had the risk-off event that took place on Thursday. It was a lot of people not wanting to sit through Friday's CPI print. They waited and seen that the number came in lower than expected, and they rushed back into the market. Two things to note here is that your best performers were the Russell 2000 and also the gold market, and that reaffirms with the lower bond yields, lower treasury yields, that a stagflationary type event is playing out. Now you look at some things that we'll be monitoring here. China will remain closed here throughout the week into February 23rd. So now traders are really watching the ADP payroll data on Tuesday and the minutes from the Fed's January meeting on Wednesday for a fresh read on the economy. You look at April gold, the lows overnight, 49.81.90. The highs of the overnight session, which occurred right around the open, 50.74.40. Futures are trading at 50.20.80 last, down about $25, which is 0.5%. The key levels to watch here as far as pocket resistance, 51.22 on up to about 51.50. Your key level support, 5,000 is more like a pivot line here, is going to be 49.31. The 10-day true range here, average true range, declining to $208.06, and gold volatility declining to 30.84, but still remains just right around that chop zone, but well off that peak seen on January 30th with the massive washout on futures. You go to March silver, the lows overnight, 74.57. The highs are at 78.42. Last of this recording sitting at 76.76, so down about $1.18. That's off 1.5%. Your next area of resistance is really the 80 mark and 82.67. The 10-day average true range sits at $9.82. So we're getting a narrowing average true range here. So silver volatility, big collapse here from Friday, sitting at 70.39, but still significantly elevated from historical standards. You look at the precious metals, the ETF flows where they were buying gold, they were buying platinum, while they were selling silver and selling palladium. So you look at the ETF flows here on gold, tacking on about 0.1%, adding 92,000 troy ounces of gold, and total gold held by ETFs are up 1.2%. Gold is up about 17% year to date. You look at silver ETF flows dropping about 0.2% year to date. Those total silver ETFs are down about 2.7%. So really unable to eclipse the 2025 peak. ETFs, they cut about 1.98 million troy ounces of silver. You look at last week, they increased gold and they reduced silver, platinum, and palladium. The gold-silver ratio sits at 65-1. So that's starting to creep up here, and it's really, you're probably going to see a continued upward movement as traders are going more into the gold market with the stagflation type of narrative playing out here, and silver just trying to find its footing before getting that next big move. If you look at silver, it's really range bound at the moment between that 70 and 80 level, with again 82.67 being the key level to watch. Now, I really focus on the numbers, the economic data, and less about the narratives out there. So if you look at the interest rate cut expectations, we only have about a 7.8% likelihood that they cut at that March 18th meeting, but you get into April here, 29, 26.9. June 17th is like 65.8. You got to July, it's got about 100% priced in of an interest rate cut. Now you look at some other things out here like Bitcoin futures, really struggling here. Still a little change right around that 69,800 level and tacking on about 4 straight weeks of losses. You do have the dollar index trade at 96.96, and the Australian dollar, one of the most trend following as far as a bullish trend pictures here, sitting up at 70.84. You get the Swiss franc pulling back about 36 ticks here at 130.21. You get the Mexican peso unchanged at 58, and the New Zealand dollar pushing up just a bit. The Japanese yen easing just a touch here at 65.36. And then you look at the VIX futures here, still above that 20 level at 20.40 last year. Remember, we get that significant upside move in any of these markets, even the S&P 500, upside volatility is still volatility and tax things on. You'll get 10-year treasury yields, and that's what I'm really watching here, down at 4.05%. It's been declining significantly. So what you're seeing is the yield curve, which was steepening when we were in this reflationary environment over the last month or two, starting to flatten out a bit. So you're getting things flattening, and what happens when you get that is you get that stagflation. So you want to keep an eye on energy, which makes up about 6% of CPI, sitting at 62.88, up 13 ticks, and that is the April contract, which will be your new front month here on the oil markets. So if you guys got any questions, shoot an email, info@bluelinefutures.com. Won't really be around the office too much here today as we got this holiday. I like to get away from the desk for a few minutes, as I'm usually bolted to the chair for about 12, 13 hours a day, every single day. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.